Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, today is that drastic CPI again. And, oh man, I mean, the treasuries have been selling off so hard. You have to think that if they come out with, a lower than expected CPI, that could give markets a lot of relief. But I don't know. I think it's really hard. Excuse me. It's really hard to make a plan for today because the volatility around this event is just going to be so high. We shouldn't be surprised if you get the complete opposite reaction of what we think it should do. So with that in mind, let's see how markets are moving around ahead of this event. And we'll start with the S&P 500. Pretty ugly day yesterday. I mean, I guess it wasn't terrible. Like, the amount of cumulative delta in selling wasn't terrible, but it was a pretty good sell. And overnight, they pushed a little bit lower, but have come back to unchanged and are actually turning bullish at the moment. Meanwhile, the treasuries, doing the same thing, pushed a little bit lower, but are now backing off. So perhaps some people buying the treasuries ahead of the CPI, which may suggest that the report might come in low. I have to say, the White House has been saying the report has been bad. And basically every time that they've said that it was the opposite. So I think they may be sandbagging us again. Either way, well, probably we should just ignore them at this point because I don't think that they actually know anything. They're just trying to manage expectations. But man, it just kind of shows you how much craziness is going to be around this event. Oil also got hammered yesterday and is reversing here. Natural gas just continues to go up, man. Natural gas. Gold and silver in the range after, a pretty, up and down day yesterday. Silver actually looks, chart looks really good here. That's a really nice trend line. Kappa down, still down. And then we get to the cryptocurrencies. How did they fare yesterday? Well, they did fail the 40K, but they are also coming back. So, oh yes, and the dollar pushing higher, pushing 100 on the dollar again. Remember last year when everybody was short the dollar? Oh, good times. All right, guys. So that's where we're at. Oh, let's minimize that. Well, I'm really tempted to come in and just, short the yields here, but that's probably not very advisable, right? But we got 7 minutes to just chat, burn some time here. Make sure I got financial juice going on. Hey, I did pretty good on time today. Well, I had an easier breakfast, so that's probably why I was able to get ready earlier. Let's come into Twitter and see what is happening over there. Feel like something about my setup is off, like that the monitor's not where it should be or something. According to David Constant of Goldman Sachs, consensus analysts are looking for the S&P 500 aggregate margins to contract by just 5 basis points to reach 11.8% in Q1 compared to last year. By excluding energy stocks, that decline will likely be more pronounced, with margins compressed by 58 basis points compared to last year. Notably, energy has been by far the best performing S&P 500 sector this year, jumping nearly 40% so far. You heard me talk about how disjointed I think things are in the past. Well, nothing has changed. Putin is not going to stop, and supply chain problems are going to increase. Good morning, Isaiah. Yeah, I mean, there's still a chance that this all blows over, right? Maybe, right? I don't know. Oh, hey, the new Quant Minds e-magazine is out. We want to read that for sure. I'll take a look at that a little bit earlier. Everybody wants to talk with Futures Trader 71 about, how there's always an equal number of buyers and sellers. It's more complicated than that for sure. And Mr. Top Step sure tweets a lot. Then there's the tweets from yesterday by Nassim that I've already read. Okay, it's nothing too much. Bloomberg is debating whether to invite Prime Minister Narendra Modi to the Group of Seven summit it's hosting in June, given India's reluctance to condemn Russia for invading Ukraine, according to people familiar with the matter. Please get Russia to, please get India to get with the program. I like that country, and I'm very disappointed in them right now. I mean, the country, not the people. Yeah, I don't know. Do the majority of people in India support that decision? I don't know. Well, liquidity is pretty light here in the treasuries, but there is a good amount of volume going off before this news. This one's gonna be interesting, guys. It's gonna be interesting. Let's get the microphone closer to my mouth. How's that? Yeah, there we go. So just to, oh, by the way, the US CPI month over month estimate is 1.2%. Okay. Yeah. Oil moved a lot that month. So the month over month number, I mean, that's, everybody's going to cite that, but it's not really important. Same with the year over year number. They're going to cite, the US year over year 8.4% estimate. Just ignore them. Okay. Core CPI is the thing that we're going to want to look at, okay? Because we know that oil went crazy, right? But how much did the other commodities move? Spot 5% is still pretty hot, okay? But maybe they come in at spot 4, then that could be a real relief to markets. On the other hand, they might come in on the high side, like spot 7, and then, everybody panics again. Let's see here. We got about a minute and a half here before we go. Man, my eye is got something on it. It's got an allergen of some sort on it. Maybe it's a dog. I don't know. I've got to do something with that dog. He's not getting enough stimulation. The family is not stimulating him enough. And I have to do all of the work. The wife, the pregnant wife just is to the point where she just doesn't want to move or do anything now. Which we also gonna have to do something about. And they have to the children's are gonna have to be doing more. I think, because no. I mean, I could probably do it all, but I kind of lack the organizational skills to get it all done, I think. All right, man. Now the liquidity is really bad. I'm surprised that people are still putting micros up. Hey, how would you feel if I went and bought 100 micros right there, Mr. Market Maker? Then you'd probably feel a little foolish, wouldn't you? Well, let's see what happens. Okay, now we can't. Yeah. Good call, bro. Okay. Could still buy 2.79. Yeah, but then you'd be stuck. And look at that, nothing on the other side. Well, there's the 2.761. Okay. The number is spot 3. The number is spot 3. That is a big miss. That is really good for the markets, guys. Ooh, but are they going to actually do what we think they should do? Oh, these treasuries, they jumped. They sure jumped. What was that? From 28 to 0.5, 0.8. I mean, that went. That was a big move. That was a big move. Okay, so the CPI came in line at one spot too, but core CPI, remember the number that matters, missed big time. Spot 3 versus spot 5. So in fact, the inflation appears to have cooled off. Well, what do you know? And this is just in wild mode. I have to, you know what? I don't think I've ever seen, I think I've seen a miss of spot 1. I don't think I've ever seen a miss of spot 2. That's pretty crazy. So, first of all, I think we should put the, what we call it, the trend day scenario on the table here, like right away. Okay. And the market did react to it the way that we would expect. And we saw about 13,000 contracts go long. Okay. But the problem is that there are so many shorts out there that this could be like a 30, 40, 50,000 net, move day in the treasuries. So we're going to get some really big liquidity holes here. It's going to be really, really volatile. I'm pretty happy with where I clicked in though. Whoever it was that had that one lot out there has gotta be regretting it, right? But let's just see where it goes. The S&P 500 really liking this. By the way, there's a lot of gamma at 4,500 in the S&P 500, right? So that is, could they make it there today? 60-point rise today? Yeah, for sure, for sure. Actually, let's just let's just take the gamble over there on the sim account. I'll add more if we get back to like the 30s. Very, very low liquidity, very, very volatile. They definitely have fallen back into the liquidity hole of sorts, but it's very light. So this kind of action I think is really hard to scalp, right? You have to have a pretty decent stop now to try and maneuver in this action here. This is, this doesn't seem like, every time we kind of come into this point, you'd get a really interesting development that just is hard for anybody to expect and completely shakes up the whole picture. So CPI misses expectations big. Market's super concerned about inflation. Where do they go from here? Are we going to see how big of a pullback now can we see in the treasuries? What's appropriate? Well, we got to remember at 10 around noon Eastern time, Brainerd is going to speak. So there's that today. We also have a 10-year note auction. Ooh, that could be oh man, cuz the auctions, the cash in the overnight and the cash auctions in Germany and stuff, there was a decent bid. So there could be another insane auction move today. Hmm. Well, there was a really wild push higher there that fizzled out awfully quickly. So I think that from like the short-term scalping perspective, probably that was your best move for now, and they might kind of balance around the 120.10 area for a bit before. Trade a bunch of contracts up in there before moving more. How much came in there? Well, it wasn't a huge impulse of orders that pushed through there. Okay. Well, we started out at about let's just say we started at 10K. So we're now plus 16,000 contracts along. Oh, would you mind explaining what spot 3 is? Spot is what British say instead of point. So what it means is that the US core CPI expected was zero point 0.5 and the actual was 0.3. So it missed by 0.2, right? Or a 200 basis points essentially. Now let's come over, read a little bit. That's really weird. Okay, well, Zero Hedge hasn't posted anything on the CPI yet. US CPI report, the all items index continued to accelerate, rising 8.5% for the 12 months ending, largest 12-month increase since the period ending December 1981. Yeah, so even though the number like missed big time, probably almost everybody in media is still going to be saying, "Oh, the CPI is terrible." Well, in our initial entry there in the S&P 500, not very good. Although I think that kind of should be expected. Like usually, if I'm not like really on the ball off of a move like that, and I try and take a trade in it, I usually end up being the center of the liquidity hole. Like that's just what tends to happen. And so you kind of have to expect that you might have to, you know, for this trade in the S&P 500 to work, there's going to have to be another leg later on, and I'm going to have to sit through it probably. But that's also why I put these other orders down here, because I was like, well, they could come back quite a bit. So okay, so you know what? I'm not really getting much, but I really shouldn't be relying on other people. Let's go read the report, eh? Latest release. We'll bring it over here. Try and bring it down so that we don't miss what we're seeing. Okay, so what we got here? food was still pretty high. 1.2%. Energy, of course, was crazy high. So where did the change? Commodities, less food and energy was a negative spot 3. Used cars and trucks came back significantly. Ah, yes, I see. I see. So it's kind of the same thing. But then other things, apparel, spot 2, medical care, spot 2. Okay. So it is, in fact, probably a little bit more in line than expected, but because the used cars inflation declined so much, it really brought the number down. They don't always read into that nuance very well, though. Even then, even it being in line is kind of like a big change in market expectations, right? Hmm. Did you use tip? What do you mean? Whoa. Whoa, mama, did you just see that? Like 4,000, 5,000 contracts traded across 4 prices all at once in the 10-year treasury? Wowzer. Wowzer. I don't know, man. That is, I have never seen that before. Man, I don't think I've ever seen that before. Holy crap, 5K traded across 4 prices there. Never seen such a sweep in Zen. That was nuts. That was nuts. Goldman Sachs. The global threat environment remains elevated, and initial channel conservations indicate that the Russia-Ukraine war is driving even greater levels of demand. Stop moving, Twitter. We continue to view CRWD as well positioned in the sweep. Yes, they're talking about CrowdStrike. Yes. Cybersecurity is still a good place to be. I think so too. Did you use time and sales? No. I'm not sure what you're asking. I listened to the news. I saw somebody had a bid somewhere where they shouldn't have, and I hit it. Use the DOM, I guess you could say. Or are you talking about to see that big buy? You could only just see it over here. Unfortunately, when you split it up, there's no way to correlate that it was like all one big buy order, but because it happened all at once, probably was. So the dollar is getting hammered back down here now. I think there could be way more in that. 99.76, and the Japanese yen is moving on big volume as well. This has been good for gold and silver as well. Looks like gold and silver just following the correlations with the treasuries. So, and there's the S&P 500 still going. Extending its highs. You know what? Like, I added 3 contracts, and it's like, well, you should take some off somewhere, but like, probably we should wait for another liquidity hole to appear in the S&P 500. Yeah, the recon tape and jigsaws is what you would look at. But you see, like, you look here in ZN, right? So this was kind of the area where it happened, and you can see like multiple 1,000, 1,500 lots that traded through there. But it can't come in and say, that was all one big market order that swept for prices. You might be able to see that with market by order data, but I can't. So I can't see if it was all one order or a stop run, a rush of orders, or what. But to see over 5,000 contracts trade across four prices all at once in the treasury, I've never seen anything close to that aggressive relative to the amount of liquidity in the book. But hey, you know what? Where they did it, was a good. If it was a buy, let's just assume that it was opening a new position to buy. There was a darn good price to do it at, wasn't it? So they're already getting paid for it. Yes, used car and truck prices fell 3.8% in March, largest monthly decline since 1969. OPEC report coming out. Oil output increased by 57,000 barrels per day in March to 28.56 million barrels per day, falling short of the pledged rise under the OPEC Plus agreement. Isn't this what we've been saying? They cannot provide the supply that they want. They say they will. Can you show us the setting of the recon tape in ES? I don't even know if I have a recon tape open in ES right now. No, actually I do. Yeah, I do. But it's not showing anything. What are you trying to figure out? How big of a block size should you put on it, maybe? How big of a block size should you put on it? I think that in ES, if it's anything more than 50, it's significant, but you might want to up that to 75 or 100. You might want it when the market opens, you might want more like 100, 150, but. Okay, so there was a little bit of a liquidity hole, we could say, here in the 10 area in the 10-year, 120, 10 half, right? They have now expanded that volume profile there quite a bit. So now it's all the way from about 09 half up to, let's say, 13. Yeah, I caught a little bit of that move. Look, I still have my sim long. So in ES, I think I hold that to 4,500, man. That's easy call. I don't know. I say it's an easy call. I'm probably going to regret saying that, huh? Probably going to regret saying that. I think that in ES, the options is going to gravitate towards 4,500. So I think that for this as a swing, that we keep it to 4,500 or the close, whichever comes first. And the treasury over here, well, we should give them some time. I don't know if they'll. So here's the thing. They missed by spot 2. Why did they miss by spot 2? Because used cars and trucks finally came back. So it was kind of the same thing on the other side, where it was like the estimates were mostly in line except for the used cars and trucks prices. So that means that the news is not quite as dovish as it may appear at first, but there was a lot of market expectations about it being bad. The treasury market has been moving really hard, and that kind of a change, even just to even if CPI is like, if that number came in spot 5, right? I think that you would still be seeing a fairly sizable move up in the treasuries. And here's the thing again, that on the treasury, there is an auction today, and there has been demand in the cash for those auctions. So we could see some crazy stuff in the treasury today, but it kind of looks like right now that they're filtering orders into this hole. Like you can see it's going back and forth, but there is a decent piece of volume. So they've kind of found the liquidity hole and they're trying to get as much as they can out of it. Once that peters out, maybe we'll see another meta order long sometime around the time that the S&P 500 opens up, right? But for us in the treasury, um, if there is going to be further upside in the treasuries today, we might have to wait until much later in the day to see it. All right. And who knows? This could be a multi-day move too. Okay. Does that mean the equities will go down? No. I think that they're going to be positively correlated in this situation. Because one of the primary concerns on the equity market's mind has been the pace of the rise in the interest rates and concerns that the Federal Reserve is going to be doing multiple 50 basis point hikes and things like that. So anything indicating that inflation is cooling off and that the Federal Reserve doesn't have to like completely panic is going to be really good for equity markets. Yes. And especially since it's just kind of like contradicts the most recent action, remember that meta order going the opposite way has more impact, right? Okay, so what do you think about a funded account? I think that you're better off putting $500 into a micro account and either just trading it sim or trading it very conservatively. And by and large, you will spend less money than trying to pass the combine every month. Because that's like $150 a month, right? Versus $500 keeps you going for 10 months. That's what I think. So, unless you already have like really well established record of profits that meet their targets and their risk parameters. If you have that, then go for it. Make a ton of money. You have that though. You know what? It was one of the things. The thing that's been on my mind a lot lately is, hey Seth, you should be a fund manager. Well, not that I should be a fund manager. I'm not so sure if I should be a fund manager or if I'd be very good at it or anything, but it sure would be fun. Seems like that would be like the place to go. That would be like the most prestigious move is to go and manage a fund, right? And I look at the top step qualifications, right? Well, listen, if you can hit those in a month and you don't hit them every month and it's kind of a little bit of a YOLO for you, then yeah, that's when like doing it on the combine makes a lot of sense because you're not risking your own money, but you can certainly make money from it, right? If you're kind of doing the YOLO thing. Okay. That's where like like trades by Matt. That's one of the reasons why I feel like I can't really slam him too much, even though I feel like that a lot of his trading is just reckless risk taking, and I don't think that price action has any efficacy. But he's doing it on combine accounts, and he's pulling stuff out of it through that, which is very impressive, right? But if you're able to pass the combine and keep the combine account for years and years and years, the kind of performance that they're asking for is like you really should be running a fund and not doing a combine. You know what I mean? So it's kind of a perspective on the the funded trader programs that I never really thought about before, right? The performance that they're asking for is so high that you would almost have to consider just starting your own fund. And for that matter, one has to ask, why can't you invest in a hedge fund that is, funded trader program? Think about that for a second. Why isn't Top Step Trader why doesn't somebody make a funded trader program that is a hedge fund? Seems like you should be able to do it, but I don't think that they actually make very much money off of their traders trading. Maybe it would make more sense as a stock, and then you make money off of the commissions you earn. But could you make it a stock? I'm not sure that it would fit the qualifications for stock. No, I don't think that you would be able to register that. I have to think about that for a little bit. I have to research that a little bit. By the way, Treasury's moving a little higher here now. New highs. Now we're getting into cray territory, right? This started at 24, so we're almost got a full point move in the 10-year. Not quite yet, but they're little casinos. Yeah, but this is where I don't even remember the name of it, but this new combine, I really think if that's your thing, and I don't know if that's my thing. To be honest, I've never had success when I really tried to YOLO it. Every once in a while, but generally speaking, it tends to end poorly for me. But if YOLOing it is your thing, you'd want to take advantage of that because there's no consistency requirement for them. Like they advertise that for that one combine, there's no consistency requirement. All you have to do is reach the profit target, and it doesn't matter how many trades or how many days you traded for it to happen, right? I don't think they're going to be able to do that forever. So if you're in that sort of thing, I would take advantage of that one. That guy was supposed to wanted to talk to me. He gave me the information that we wanted, but then he kind of like dropped off the earth. He probably forgot about it. He's probably busy. But it's one of the guys from this. They contacted me and told me about it. Thought it was an interesting that when he told me that, I was like, oh wait, hold up, what? No consistency requirement, eh? Wow. Yeah, so what I see here is, and in the treasury is a little interesting because normally I would expect to see this kind of order flow where like we come up to the highs, like there's 2000 at 16, even maybe you see it 3 to 4K, absorb at 15.5, and then they just blast through 16 up to 18. And maybe that still happens, but that's not how we got here. How we got here, it just kind of moved through. It was just kind of like market makers got out of the way and they moved up. Well, we're now to almost 30,000 long. So like I said, this could be like a 40, 50, maybe even 60,000 net. I think that we kind of have to put those 60 to 70s on there because, again, the auction, right? The auction, crazy. Speaking of that, I just blew up my... Oh, Marty. I'm sorry. I hope you had fun, though. Hope you had fun. But, this kind of brings me to my other topic of late that I've just been harping on is why isn't the standard of performance like of course you can't do this for like a funded trader account or anything like that, but if you're having a discussion online about how effective a certain method is or how successful a certain trader is, why isn't the standard 5-year returns with like showing what the maximum drawdown and Sharpe ratio is and stuff? Why isn't it that? It's just a gap fill. Do you think that this positive move would continue? I think that it could continue. I'm very uncertain. Now, you know what? Anytime you know what? Ugh, I have so many thoughts on my mind. Let me come back to that in a second. Well, I already made the point, right? Why isn't it 5-year returns? Well, there was somebody on Reddit. They were showing results, and they had a 2-to-1 risk reward. They had a 2-to-1 risk reward, and they're like, well, you can be consistent with micro stocks, and But there are people like, yeah, but you have a 2-to-1 risk reward and you're only showing us a month of results. He's like, well, I could show you the other 3 months of results. They're like, you said you've been trading for 2 years. Why don't you show us the other 2 years? And then I said, well, shouldn't it be 5 years? Like, if you wanted anybody to invest in your fund, you're going to need 5 years. Not to mention that low R tends to result in higher kurtosis, which means you need more samples to see the true stats of the strategy, right? So it should be 5 years, right? Eh. So then brings me to, I was having a conversation on Futures IO that like went way off the rails. Like, oh my gosh, like something that I just said, like really, really upset this person. I said, like, seems that most traders don't understand the statistical consequences of fat tells. They don't understand that taking on excessive risk can generate profits in the short term. If they knew that, they wouldn't say the things that they say. They wouldn't do the things that they do, right? They were very offended by that. I think because it was like, well, I was saying I know something that other people don't. Well, I do. I do know things that other people don't. And after that conversation, I was like, well, am I too forceful? Obviously, I can have a tendency to be so strong. I mean, when I have facts backing me up, I just state it as facts. But sometimes that offends people, especially when they're more concerned about how they feel about something than they are about what the facts are, right? But then I was like, so I need to chill out. But then on the other side of it, I was like, yeah, but maybe it's because I'm a little bit too diplomatic on some things. Like the issue in this particular one, like the way that it started was that they mentioned a couple of YouTubers. And I was like, yeah, but there's not enough of a track record, and you can make money from taking on risk in the short term, because the people that they were watching, well, it was Matt. And again, I think Matt's a nice guy. I don't think that everybody that watches that understand that a good deal of his success comes from excessive risk, right? I hope he understands that. If you don't understand that, Matt, come talk to me. But if you do understand that, then cool. Just make sure that your audience understands it too, right? So he's a nice guy. He's trying to do his best, I think. But I think that that's why they were upset. And I was just kind of trying to leave it between the lines. But then I was like, no, maybe I should have just been like more clear. Like, yeah, no, that person that you're watching in particular is taking on excessive risk. So reconsider what you might think about the effectiveness of price action as he practices it, right? I think that one of the things that happens, here another thing for you, Matt, is that what I don't pay attention very often, but some people will say, oh, well, he blew out today, and I'll go and watch it. And I'll see him, he like really tries to take responsibility for his trades, and well, I shouldn't have done this and I shouldn't have done this. But in all honesty, he probably kicks himself too much. You gotta understand, it's a tendency of the strategy that he uses. It's going to happen to the most disciplined person, because that's what that strategy tends to do, right? Because the profits are being generated largely from taking on excessive risk. So don't beat yourself about it, right? But I've always been kind of like, well, I don't want to talk about other people. I don't want to necessarily, sometimes I got to be a little bit diplomatic about what I say. I don't think that I said anything mean there, right? So I think we should be okay. But like, I should say what I really think more often. So when we come back to the treasuries, is this going to continue up? Well, I don't really know for sure. We sure have traded a lot of contracts, right? We're up to basically 30,000 contracts long now. So we should keep that in mind. How many contracts Can we get, how much further could this continue to go? Well, we're still kind of in, trying to balance. We ended up balancing a little bit higher than we expected, but it still does look like a liquidity hole and not like a second leg. So that's the first thing. And then the second thing is that there's an auction later today. But could this move in the treasuries continue higher? I think yes. I think actually I feel pretty good about them making another move higher. Like, this is a situation. If ever there was a situation where you could predict a trend day, I think it's today. So I always try to be careful because I don't want to try and make a prediction and then you're wrong and everybody's like, well, you're wrong. But that's what I think right now, is I do think that it could go higher. Of course, I might be dead wrong. It might like just completely reverse. And that would be hilarious if it just completely reversed on me. Dude, if this trade completely reverses on me and I take a loss on it, I really hope that I can laugh about it, because that would be insane. That would be insane. You made more than you lost on the top step? Oh, that's good. Well, I remember when you got it. How long did you haven't had it for that long though, right? It's only been like 2 months, right? Well, that's interesting. That means, because the drawdown is still like 2,500 or something, right? So that means that you pulled more than 2,500 out of it. That's good. Yeah. Yeah, it was like 2 months. But it just comes back to like, the conversation really should be what kind of performance are you looking for? What's like realistic, and how do you accurately benchmark that? Because I know that when I started, all I really cared about was hitting that profit target, and I knew about these other metrics, but I didn't really care. But the further along I got, the more I realized that those other things really kind of matter more. Like in the professional world, those are the things that really kind of matter more. This was a surprise. So were you kind of trying to swing it through that news and got blown out because of that news? That's understandable. I mean, here's the trade that I've got is I'm short 10-year yield. I'm short 10-year yield. Could you elaborate? What you're gonna have to be more specific about what you want to elaborate, because I move on so quick and I'm very ADHD. Oh, you didn't know that CPI was today, Marty? Oh, come on. How do you not know that today was CPI? Okay, with the other metrics that matter more over the point target. Okay, so when you are managing a large fund, what happens is the more money you're managing, the more difficult it is to make a profit on it, because essentially your impact on things becomes larger and larger, right? So if I wanted to come in and buy, 30,000 contracts in the 10-year treasury, like it's gonna move it up, right? And the problem is that you would think that it moving it up would be a good thing, but it's not, because if I want to immediately turn around and sell it, it's going to move down more because I've left a liquidity hole behind me. I'm going to lose money, right? So this is the burden of managing large amounts of money, is it costs more for you to trade. Your trading costs go up, right? So if you have a strategy that is like YOLO balls to the walls, let's make a couple 10K, like you can size that up real quickly, right? And you get lucky. But those strategies will catch up to you in the long run. I think that what is better to do is like, you can YOLO it by, early on, but eventually you're going to have to kind of chill it out, and you're going to have to find something that's more consistent if you want to continue to grow, right? So if I'm looking at a hedge fund, right, and I see that hedge fund made tons and tons of money, like they made like a 50% return that year, but their Sharpe ratio was like 0.2. Do I necessarily want to invest in that hedge fund? I mean, maybe if you want to make a 50% return, but what most people are investing in hedge funds for is for the diversification. That, they're not necessarily looking to double their money. They want to ensure that they still get their 10% return every year, even if the S&P 500 is down. So they need to be invested in some things that have uncorrelated returns to the S&P 500, right? So from that perspective, things like a Sharpe ratio starts to become more important to you, right? Now, Sharpe ratio is a flawed metric, but for the purpose of the discussion with retail traders, like, let's just get like a Sharpe ratio above spot 5 first, because I don't think that there's too many of us that really have to worry about, oh, our Sharpe ratio is 4 and are we going to blow up tomorrow? Right? This is alpha. Well, I'm glad you like it. I mean, those really, if I think about like, what is it that I say that you're not going to hear other places? It's going to be number one is going to be that is like more nuance around performance, right? Realizing that the kind of performance that retail traders look for, that hardly anybody over a 5-year period actually achieves that, right? And then the second thing that you're going to hear from me is the market microstructure. So if you haven't watched my 2 most recent videos about stylized behavior of markets and the inelastic markets hypothesis, yeah, absolutely got to watch that, because that is like not brand new, but relatively new information that the vast, I mean, hardly any retail traders out there know about this. And I think that it's really useful information to know, because it's like, it's proven information about how the market actually behaves with empirical research backing it. I was up $800 shorting value area high of yesterday. So do they allow you to hold the positions overnight and swing them? Where can I find a market chandelier alert? That kind of sounds like something that you might want to go to Lizard Indicators if you're using NinjaTrader 8. Yeah. Well, the 5-year kind of looks like it's rolling over a little bit, but um I think we're still really rotating around a value area, and we haven't yet gotten to the place where I thought, now, if they extend, maybe they'll try and do it at this time. So no, you can't. Oh, okay. Because one of the things I've wondered is, like, if I'm gonna swing this, like today is a perfect example. Is like, if I'm gonna swing this, I should still be short, right? But do I try and hold it through the CPI or not? Because I mean, if it had been a bad number, then we'd be like rolling in it. But otherwise, you got to cover it real quickly, right? You take a pretty big loss. How do you deal with that? Or is the best thing to just avoid that volatile of a news altogether? You know. But if you avoid that kind of a move altogether, you kind of lose a lot of the performance that you would be that you're looking for swing trading to get in the first place, So it's quite a conundrum. I think that if I ever start a fund, it's probably going to have a much more significant automated trading machine learning component, right? Oh my gosh, this one is funny. Live monitor tweeting somebody. Master Trader says, "Big sell is almost here, and I'm expecting a massive Black Tuesday crash tomorrow, larger than any that has ever occurred before, going into total free fall on Wednesday. The real selling will start Thursday and accelerate through the end of the week. Join my premium service." And yeah, that was couldn't have been more wrong. He couldn't have been more wrong. Follow up with those videos. I really appreciate it. Yeah, I appreciate. Oh, you're from Jim Dalton's. Yeah. Well, so that'll be really interesting to you then, because Auction market theory isn't wrong per se, but the information that I provide for you, especially in the inelastic markets hypothesis, kind of gives a better explanation for what they're doing. And I think that you can game out what's really going on in the markets better with if you have that information. To explain why, basically markets are inelastic. So what really matters is new orders coming in. So in auction theory, they kind of talk about it as like, this is balance. Like people agree here, and then there's, range extension high, range extension lower, and then maybe one side of those, they accept it. That's not actually how it works. What actually happens is if there's nothing going on, it's going to settle into a spot, or if there's a large liquidity hole, it's going to settle into a spot. And then a big order comes in, they're going to move. And then if they move up and another big order comes in the other way, it's going to come all the way back down. But if it doesn't, you're just going to form a liquidity hole and it's just going to balance out there again, right? So essentially, we've been able to prove mathematically why the market moves that way. And it kind of clears up a couple of edge cases in auction theory, because even though auction theory was based on like observed behavior of sorts, but they didn't really actually understand why it was happening. Their theory about why it was happening is wrong. So I hate stops. They always get triggered by the bots. I was, so I don't remember who it was. I think it was Live Action that told me yesterday to go and look at a couple of these other YouTube videos because they had a video about market microstructure. So one of those accounts did have a video that had market microstructure in the title. And I mean, I guess they were talking about microstructure because they were talking about the book and resting orders and that sort of a thing, but it was not the empirical research that I made a video about. What's the advice for a 17-year-old boy who blew up 2 accounts, crypto, futures, and index? Do really well in school, go and get a degree in quantitative finance or finance and join a large firm and trade for them. Yep, that's the real game, folks. What we're doing, like, this is the thing. Going back, remember I had this conversation with somebody that like really went off the rails. Well, the thing is that I've found that when you share this kind of information, that there are a lot of people that really don't want to hear it. There are a lot of people that really don't want to hear it. And why is that? Well, I think the reality is that anybody that's really smart enough and really knows what they're doing from the get-go isn't going to do retail trading. They're going to go and try and trade for a bank, right? So what are you left with? Those of us that are stubborn and egotistical enough to think that we can do it, right? And telling somebody like that well, there's some innate things about you that are going to make that pretty much impossible to do unless you can understand this math and overcome it. They don't like to hear that. Not at all. I wish I was smart enough to be a quant. I don't know if it actually requires like a super high IQ to do it, but it's a lot of information to know. Like, I'm trying to make the move over to more machine learning kind of stuff. And it's really its own world with its own set of knowledge and libraries and stuff. It's not something that you just pick up in a weekend, that's for sure. That's for sure. And I really don't feel like I have enough time to dedicate to it as I would like. So yeah, but we're get there eventually. Right now, I don't know why I did this, but I kind of feel like I need to do it for some reason. I mean, I started it, and I think maybe part of the reason. Listen, so I got this book, Into Seth's Psyche, Series 65 book. I got it. So once upon a time, I went and I got a book for to become a business major or to go back to school and get a master's in business, or I forget, MBA, get an MBA. That's what it was. I was like, that's something that could really help me in my career in finance, right? And I got the GMAT books and I did all of the study and everything. I didn't really go through the practice tests, but like I didn't do it. I didn't take it. Once upon a time, I went and I went through the effort to do real estate school, and it was really exhausting. And then the housing market crashed, and so I was like, well, I don't really feel like getting my real estate license now. Could have been a very, very different life if I had gotten my real estate license, wouldn't it? Maybe I would have caught some of this housing market insanity, right? But I never did it. So I'm sitting here like, maybe I like to do this study and everything, but then I don't actually want to go. So I feel like now that I've started that, I should obligate myself to finish it. But it is kind of in the way of research on machine learning. Is there any other material? Well, in the videos, I cite the research studies that I pulled the information from. So that's really what you should do. So you get the overview of it, and then you go and you get into reading the studies. And then once you get into reading the studies, man, like you could just read all day and you'd never read them all. Like these guys like Jean-Philippe that compiled the what is it? Trades, quotes, and prices, markets under the microscope, financial markets under the microscope, whatever. Like, how do you write a book like that? There's so much that they cite. Like, how do you even know that all of those studies exist? Like, you only know that from like decades of reading it every day. It's insane. It's insane the amount of knowledge there is out there about the microstructure and behavior of markets that retail traders never study. And all I've done is I've just pulled out like the most useful ones to share with you, right? Or at least the most useful ones that I've found. Well, the S&P 500, it looks like it's coming all the way back to my entry. So now it's like, should have taken more profits. I don't know. This kind of looks to me again like they're coming back into like the center of the volume profiles. That kind of suggests liquidity problems, right? Fire Department of New York authorities responded to a smoke condition at the 36th Street station and discovered multiple people shot and several undetonated devices, according to an FDNY spokesperson. Okay, so this, I don't know if this is a multiple people shot at New York City subway station. So I don't know if this is necessarily something that moves markets, but this sounds like a significant story. This sounds like some sort of like undetonated devices. I mean, that sounds like a terrorist attack in New York City subway, right? That's or I don't know, something crazy. Like that's going to be big news. I don't think that it's something that necessarily moves markets at the moment, but that seems like big news. I suppose it could extend into big news if it was a terrorist attack and like Russians claimed responsibility or something like that, you know. That seems like way outside of the realm of possibility, but I'm just trying to game out like what's the worst that could happen off of that piece of news. If that's the case though, our position long in treasuries is still a good one, right? Maybe not so much in the S&P 500. I remember watching this 10 years ago and did not learn any math. Dude, this is Math is hard. That sounds like a terrorist attack, man. Mhm. I shouldn't be saying that. Like, it's too early to speculate. Can I take that back? I didn't say anything. I just reported the news. We don't know what it is. Let's be really responsible and not try and speculate on this. I owe you an apology for the AMC trade. Wait, I don't remember what the deal was with that. It took off quite a bit, but then it fizzled out. I remember watching it and being excited about it, but ultimately thinking that it's only going to get so far and feeling pretty justified by how it ended up behaving in the end. Am I like, is that my mind intentionally forgetting something when I was wrong? And now all of your focus is to learn the DOM? I, I was excited about it, but I didn't think that it was going to be like, I really thought that it was going to be a few days, maybe something crazy happens, but in all likelihood, 2 or 3 days, and then it fizzles out, right? Which is what happened. Oh, no, I don't remember saying AMC could go to the 1,000. I remember saying GameStop, when it first happened, could go to 1,000. And you know what? If Robinhood hadn't turned off the buy button, that would have gone to 1,000. Oh yeah, that totally would have done it. So that you were right that it didn't go to 1,000 is because you guys cheated. It's because y'all cheated. It's crazy to think about still, isn't it? Yeah, can you believe they just like retail traders are buying this up? Let's just stop them from buying it. Oh my gosh. Did you? Oh, I've blown many accounts. I've never like, so when I think of a blown account, I think of like the broker takes you out of the position and you lose more money than's in the account and you owe them money and that sort of a thing. That's obviously that's never happened to me. But have I taken my futures trading accounts, had a large enough drawdown in them that I didn't feel comfortable trading them anymore? Every few months, man. Every few months that I've been doing this. I'm getting better. This one that I'm on right now is probably the longest that I've done it. And I actually, if it wasn't for like the data commissions, we'd be making a little bit. But yeah, I don't know why I'm trying to justify that, but that's just what it is. The big boys always win. Well, yeah. I don't know if I could say that that Citadel, Melvin Calpedal, etc. won per se. They just kind of prevented the retail traders from winning, right? But that wasn't the. Here's the thing: when you're calling about specific prices, once we really understand market microstructure and how markets move, it really kind of puts the perspective of calling out a specific price. You really understand it differently, right? Like, I could come out and I could say oil should be worth $150, right? Excuse me, I'm kind of having my stomach is equalizing out here. Yeah, they did bail out Melvin. So if I say that oil is going to move to $150, what am I really saying? I'm really saying that based on the supply and demand and long-term fundamentals in the oil market, I think that eventually they're going to get to $150, right? But we know that markets don't necessarily follow the fundamentals. They're informationally inefficient because the impact of large orders can move prices very far away from what fundamental value is, and et cetera, et cetera, et cetera. So when I come in and I see GameStop moving up and I say it could hit $1,000, am I saying that that's like where the fundamentals will take it? No. What I am saying is that there's now enough retail interest in here and the book is light enough that they could buy it all the way up to $1,000. And guess what? We were right on that, but they turned the buy button off. So, you know, trying to set a price target like that for a trade, you kind of got to realize that your ability to call out a specific price like that is really hard. It's maybe not a game worth trying to play. You know, it's maybe not a game worth trying to play. So we come here in the treasuries. Like, I think there could be another further move, but I don't actually know where it's likely to go to. We could come over to the volume profile and we could call out like key benchmarks, right? When we come into the 10 year, you know, we're getting 120.16 as like prices from last week, right? Next step up from there is like 23, right? They could go there, but how do we know if they're going to go there or not? It's all going to depend on how many orders trade it. Well, could there be more orders to trade it? Well, we've done about 35,000 today. On a news like this, you could get 50, 60,000 by the end of the day. So is it possible that they continue up? Yes. Is it likely? I don't know. I do know. Actually, I think it probably is likely because I think that the auctions are going to come along and it's going to really push them up. But I digress. So I don't feel like I was wrong, but you're so ahead of your time. You're going to be rich. I hope so. I don't actually know if I am gonna ever be like rich though, to be honest with you. I don't know if I am willing to make the sacrifices in my personal life to become that successful. Like I like to work out and keep my health and spend time with my family and so on and so forth. And probably to get to where I want. And not you, Seth. You're old. Oh, I gotcha. I'm just gonna shut up now. Okay, well, the S&P 500 has opened up here, and their first impulse so far, I didn't really see a big change in the volume. Like, well, actually, the volume, so market orders so far on the open have been long, but price declines. So I don't know. With this sort of a move, most retail is that's probably true. Although since the S&P 500 just opened up, most retail probably haven't really taken positions yet, right? But you've also got to consider that, like, especially in the treasuries here, everybody was short, right? Every Tom, Dick, and Harry fund, CTA, etc., 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 was short the treasuries going into this. So I don't know how you game that one out. Other than that, there's going to be a liquidity hole, and a lot of volume is going to go into that liquidity hole, and then they maybe make another move from there. And which way that move goes is hard to say. unless I really know how many more orders there are to trade. Icy conditions, dude. Have you guys? We haven't talked about the weather. Have you guys been getting crazy weather in your place? So my understanding is that we've got like a really crazy cold front and a really crazy warm front meeting each other up and creating essentially a blizzard in the Midwest. So like the Midwest and New England are going to be hit by this insane blizzard. Yesterday, like it was pretty nice last week, and then yesterday, snow. Just it was like oh, it's raining a little bit, and then next time I look out, there's like an inch of snow on the ground. What the heck? Just it changed so fast. But then in Texas, they're going to get a huge heat wave, and they expect that there's going to be large wildfires in that area. What the heck? Maybe Biden needs to turn HARP off or something. I don't know. I don't actually believe in that conspiracy. It's a conspiracy. Forget I said that, okay? I'm joking around, but like seriously, some of this weather has been a little zany. Market is set up for a monster short next week. Yeah, you might be right, TLA. I think that going, especially now that we've had the CPI was not so bad. I think there's going to be a really strong tendency for the S&P 500 to gravitate towards 3,500, right? But after that, I think that a lot of these dynamics that have kind of been dragging the equity indexes down are still going to be there. And if they push down much further, you're probably going to see something break. How do you trade palladium? I don't think the CME does palladium. I think you might have to do the London Metal Exchange. No, don't do that. Don't do that. Maybe go and find an ETF. There you go. Mike Pence tweeting inflation is now at its highest level since 1981 at a staggering 8.5%. Joe Biden and his radical allies in Congress must put a stop to their reckless spending and get America's economy back on track. I mean, that's a good tweet for Mike, but like, I just find it funny that the politicians are all talking about 8.5% inflation, and we're over here like, oh, it was better than expected. This could be like a trend day, etc., etc. like how the market views that piece of news and how the average person views that piece of news are like complete diametric opposites. Yeet. Is that time to yeet it? Oh, somebody's trying to spam Discord again. Yep. Listen, spammers. If you come into my Discord and you just try and post the link, it will be immediately deleted. So y'all need to just stop trying because I'm getting like 20 a day now. You say lots of absorption. Well, the treasuries come back down to the lower end of that range, that's for sure. So that doesn't really look like the leg that we wanted. We may have to deal with like a really big drawdown here on this if we want to hold it to the auction. Of course, we could just try and take something out right here. I don't know. I don't know if what I've got set up for my day-to-day allows me to really hold it to the auction. But White House wants to blame inflation on the Russia-Ukraine war in Eastern Europe, but the U.S. itself went to war in Iraq and Afghanistan and more, and we didn't see inflation like this come from it. Oh, that's true. Well, no, listen, here's how you approach this one. Okay. What caused the inflation? Okay, well, Europe is just as susceptible to the inflation from the Ukraine prices. Frankly, more susceptible to it than the United States is, right? So if we compared US inflation to European inflation, we might be able to sort out what are the things that are causing it. And guess what? US inflation is significantly higher than it is in the Eurozone. Why? Because the United States dumped a lot more money into the system than the Eurozone did. That's simple. That's simple. See how I did that? Yep. The evidence supports the idea that a large portion of the inflation that we're seeing, of course, there are multiple factors, but a large portion of the inflation that we're seeing was caused by fiscal stimulus. Okay. Yeah, live monitor tweeting terror attacks in NYC and the market is rallying. Okay, ... I agree. We haven't heard. Okay. Investigators are looking to determine if the attacker used a smoke grenade during the attack, New York Police Department tells me. Source tells me. Yeah, the supply chain problems are a factor, but why would the supply chain problems affect the United States more than Europe? Hmm. Surely the supply chains is a major factor, but looks like the fiscal stimulus is a major factor too, right? This piece of news in New York is very concerning to me. Like, we've been so through too much the last 2 years, and now we're gonna have a major terrorist attack too. It, I'm saying it too early. I'm not saying it's a terrorist attack. That's not confirmed, but sounds like something that could be a terrorist attack. Interestingly enough, the treasuries are coming back quite a bit here. Thing is if there was a terrorist attack, I would expect the treasuries to probably buy themselves up, right? I think what's happening here, though, is some steepening. Yeah. So what you're seeing is the 30-year is not moving up as much as the 5-year is. And that's why you kind of get in this behavior here where it seems like, this should have been like a $50 move, and it's not. It's because of this spread. But look, all of the treasuries moved down there. They didn't really move like on volume per se. And I can see that the 6J moved down and the dollar recovered. So that's probably more of a correlation related move. So that does not affect our thinking for what we might see for the auction today. It's been what, 15 minutes since the S&P 500 opened now? Slowly grinding higher, it appears. Mixed bag on the print bonds having a relief rally, but the softer core month-over-month clashing against the headline year-over-year has some questions still lingering. Yeah, because the year-over-year number doesn't matter. The year-over-year number is you take all of the monthly numbers from the past 12 months and add them together. Guess what? 11 of those data points we already had. Month-over-month number is the only thing that's new information. That one drives me crazy. Why don't people understand that? Comes up every time too, doesn't it? This isn't the first time I've whined about it. Well, whatever. What was the max this ever got, by the way? Oh, actually, I almost got to $50. Maybe, but that was probably a little bit. It was questionable, like liquidity conditions and so forth. Oh, cool. A lot of likes on that. I responded on a thread from Taleb. You know what I hate though on Twitter? Man, I don't know how you grow on Twitter, man. I can come in and I can have a tweet that's really solid. I can have a comment that's really solid and gets a lot of attention and stuff. Nobody cares. It seems to be like people only follow you on Twitter if you're already famous, you know, like Twitter is not a place that you can go and build a following. YouTube is a place you can go and build a following. Like you don't have to hardly do anything and people will just start subscribing to your channel. But Twitter is not. Twitter is not like that. No. Treasury's balancing out and moving back up. I'm not necessarily seeing correlations with that, even though the way it moved certainly suggested a correlation to me. It sucks that Musk is not going to be on the Twitter board. I really want to know what was happening there. Do you think that Musk is going to buy more? I don't. There's so many twists and turns in this story, right? I don't know. If it turns into a hostile takeover, that's gonna be like, what? It's gonna be crazy. He might. I mean, I don't know. Like, what I would want to see is more filings with him buying more shares, and then we'd have to think about how many shares can he actually acquire and what power does that actually give him. And the thing is I have never seen a high profile corporate board, you know, hostile takeover war. I've no experience in it. I don't know what happens there. They're not very common anymore. You know, the companies found ways to combat them, and the sharks that were doing it kind of decided it wasn't all that great. You know, so a takeover like of Twitter is like, I don't know. If I I can speculate. I think I can speculate. If Elon Musk publicly states intent to change Twitter in some way at their like next shareholder meeting, because that's where I think how he would have to do it. I think that the public would largely take his side and start buying the stock up, and he would probably oust the board. It's probably what would happen. But there would be so much drama in between now and then if that's what's really going to happen. I heard something about legal procedure and that he may not be fine. Not really sure what it was. Well, so the thing that was weird was that he accepted that to join the board, and then he started tweeting a bunch of stuff on like, what was it, Sunday night, and then he deleted all of his tweets and told them that day that he wasn't actually going to join the board. So I don't know for sure what that means, but people are certainly speculating that like maybe it was a last second decision that Elon Musk decided not to join the board. So maybe Elon Musk is still planning his next moves. Like, I don't know. I really want to know what's going on behind the scenes there, right? Maybe someday they'll write a movie about it. That would be great, right? That would be fun. A movie with the same kind of style as the Facebook movie. What was that one called? Oh, we should watch that again. I haven't watched that in a while. That had great music. 9 Inch Nails is a pussy, but he makes good music. Filthy, offensive music, but good music nonetheless. Man, that treasury just turned right back up. Like, just as soon as I'm like, this is getting a little, why is it coming down here? So, and then it gravitates right back up. On hardly, like, no change in cumulative delta either, too. So there is definitely a correlation or something. Maybe it's moves in the cash market that are doing it, but nothing that I can see. So it's a little bit of a perplexing move. And for all I know, they're gonna turn around there and move right back down to 10, or maybe they're gonna bust up and they're gonna bust new highs. I don't know. Yeah, the social network. That's right. I don't know why I was thinking that the name was more complicated than that, but you're right. It was the social network. Still good music, right? Good music. I didn't watch that again because I remember at the time thinking, well, I think that they might not necessarily be entirely fair to Mark, but at the same time, like, there are some things that were going on there that were kind of shady, right? Because the whole thing was like, is Saverin really being fair in his portrayal of what happened? You know, because I personally don't think that he was, but. And you know, so at the time I remember thinking, well, I think that they're kind of harping on Zuckerberg and he's maybe not getting a fair take here. But since then, I kind of look at Zuckerberg and I'm like, well, I think he's a weird guy for starters, right? He's kind of my kind of person. Okay, maybe I don't think he's autistic, but or ADHD, but he's weird. He's weird for sure, and he has ideas about the way that the world should be that I don't think matches up with what the rest of us want. You know? So I kind of want to go and watch that again and think about that. Like, okay, well, how do I feel about this movie now? Now, so many years later, and seeing what happened. Okay, 13 people injured, 5 shots. Anybody dead, though? I haven't heard of any fatalities yet. New York Lieutenant Governor Brian Benjamin reportedly arrested in campaign finance fraud case. Jeez. New York politicians, can you go 1 year without having some sort of big legal scandal? Just 1 year. That's all we're asking, New York. 1 year. Can't do it. Great movie. All the rich people stole their idea. Well, yeah, so here's another thing. Like with that, is like the government funded some of it, right? I don't know at which point they got involved, but it kind of seems to me that some of the social networks that have became popular because the government wanted them to. This is something that we don't really have a whole lot of vision into. We just know that there was federal money involved, right? Bill Gates, Jobs, Mark, and the Google boys. It's like, okay, I'm new to your channel. I'm enjoying your commentary. Do you mind sharing some basic criteria you're looking for right now in order to take a trade? Yes. So the way that I trade is what I would term informed trading. So we know a lot of stuff about the empirically proven behavior of markets, particularly as it pertains to order flow and liquidity. We look for liquidity holes and things like that. But in the end, all of that is of questionable utility because what really matters is what future orders are going to do. And so I don't want to take a trade unless I have a piece of information that suggests that I'm going to be able to predict future orders with a high degree of certainty, right? So here on CPI, headline CPI missed by spot 3. somebody happened to have a limit order out there at exactly the wrong time, and I hit into them. And that's how I was able to get a trade that's gone quite a ways for us. We also know that there's been a lot of demand for the auctions, and there's a 10-year auction today. So that's another reason why we think that the treasuries might continue to go higher, right? And those are pieces of information. I think that people kind of will think, well, that means like trading the news, right? But it's not trading the news. It's a much broader class of information than that. What I would call them is predictors of future order flow, right? And that can be changes in expectations about the future or about the fundamentals. But it could also be advertising. Could also be gamma hedging. It could also be the positioning of the market. Like there's a bunch of things that we kind of look at that we found tends to help them move, right? So those are the sorts of things that we're looking for, right? We need to be informed. We need to have something that like the market's not pricing in. We need to have a reason for the market to start pricing it in, and we need to be able to understand the order flow and what's going on to help confirm or deny our theories and pick the best spots. So that's how we trade it. But the larger thing here is that I want to take an empirical approach to trading, because I tell you what, I spent a really long time just like, okay, here's this strategy, let's try that one out. Oh, that one didn't work. Oh, that one didn't work. I've tried like every freaking technical strategy known to man. A lot of things that people think that you can't backtest that really you can. It's just the indicators aren't written for it. I wrote my own indicators and backtested them. Right? Did that for volume profile stuff, for instance. They don't work very well. And I think that the reason for that is because the information that's coming out is not follow a pattern, right? So any kind of endemic pattern that's natural to the way that the markets are is going to be tiny compared to all these other moves that happen when the new orders come in based off of some piece of breaking news or gamma hedging or whatever the deal is, right? So that's why I take the approach that I do, because otherwise you're just kind of searching around in the dark and hoping you run into something, right? So instead we say, well, what do we know, what's proven, and we start with that. And things that we do know is we do know the market response to news. We know the markets are inelastic, and we know some properties about how the book works, right? A lot of that stuff about how the book works is really more useful if you were going to like do high frequency trading, but we can still try and incorporate it into what we're doing. And it really helps us understand why the market is moving the way it is at times. So I have a video, I'm building a new video that's like a getting started, where I'm going to try and cover all that stuff. That's going to be like, okay, is future trading suitable for you? If it is, here's how you put an order through in NinjaTrader 8 or Jigsaw. And then how do you start a strategy? And it's mostly just going to be a link to my other videos to kind of give you a good idea of like, how do you trade? How do you start out, right? But that's just it. If you really want like the advanced information, like the last two, well, not the monitors, but the two videos before that one that I posted on the channel have some really advanced knowledge that most retail traders don't know about the stylized behavior of markets and the inelastic theory of markets. So I would watch those. Because that's like, from a technicals perspective, that's what is known. That's what we can prove. Circle, the issuer of USD Coin, the second largest stablecoin, landed $400 million in funding from a group that includes BlackRock and Fidelity. So I'm curious. I'm not seeing more information posted about this New York subway incident. Just seeing more people repeating the headline that 13 people were injured and 5 were shot. So there was some sort of explosion. but we still don't know anything about who or what or why. By the way, sure looking good there in the S&P 500, isn't it? I think on that one, again, I could take some profits, but I don't know if that really, for the trade that I'm making, you know, I'm not paying attention to it enough, nor do I have any good reason about if there's a pullback, where they're going to go to, and things like that. Instead, I think what I want to rely on is that uh, the S&P 500 is likely to levitate back up to 4,500 because of the gamma. So I'm just not gonna touch it. And over here on the Treasury, I'm just gonna hope and pray. It's my strategy. I do think we could get a good move off of the auction at what is it? 1 o'clock Eastern time, right? Yep. 1 o'clock Eastern time. I'm still really curious though about this move that we had that pushed us back up here in the treasuries. Kind of appeared out of nowhere. Like we've kind of settled back down, but like I don't know what caused that. That was a weird move. It was a weird move. Maybe that was like another leg of a meta order. But it's possible that it was that, but you got to think if there's somebody wanting to buy for the auction or something, they want to buy futures for the auction for whatever reason. I don't know why you would buy ahead of the auction, but this is just how it works, right? When the auction happens, it's likely that there's going to be a lot of buying and that it will push the treasuries up. But if you're buying ahead of that, you're going to want to be real slow because you got plenty of time, right? By the way, what's the oil doing here today? Oil has been moving up. Gold had a pretty good move up too, but that move is kind of subsiding. Let's see here, Peter. While I'm on the long bond camp side, medium term, seeing FinTwit end zone spike a short rates trade after being bearish the last 50 basis points in the 10-year rally, and first actual green bond day probably means the pain trade is still higher rates. Yeah, I don't know. Like there had to be tons of people covering today, but I don't know. Like this could be a short-lived recovery in the bonds, right? It really depends on what the Fed speakers say next. The Fed speakers have been a really big component in this massacre in the bonds over the past month or two, right? It's like markets want the Federal Reserve to be more aggressive, and then the Federal Reserve says stuff that's more aggressive, and then the market moves even more, and then that just makes them want to, it's like this is kind of a scary dynamic, right? It's not one that can go on forever. Bitcoin ATM 7-day volume took a beating. I have to say, and while I'm thinking about it on the Bitcoin front, because the comment that I made yesterday on Twitter that was doing well was to Leb. He was saying, "Oh, it seems to me like Bitcoin is running out of suckers." And if you go and you look at the search engine traffic, I think that there's substantial evidence for that. It was a big bid there at 13. I think there's substantial evidence for it though, because search engine traffic has never picked up. It's never really it I really think that Bitcoin has reached like saturation in terms of like people knowing about it. Most people know about it and have an opinion. The people that really want to be highly engaged in investing in Bitcoin, the majority of them have done that. There could still be people in the future investing for more of an investment purpose, but I don't think that the market is quite there yet. You would need an ETF at the very least, and there's no way that they're going to prove that as long as Tether's around. Um, so in the meantime, yeah, you kind of have run out of people to buy it because really what the way that I see it happening is either one, Bitcoin like collapses because of Tether, or B, it becomes more of an established asset class that will mirror the S&P 500 mostly, right? So that you're not getting the search engine traffic kind of suggests that like that's what's happening. Like people aren't like jumping on board, getting excited about it. It's like they know about it already. Let's see here, David. Had limit orders placed for CPI on the Great British Pound and triggered entered currently profit. Hey, that's good. Whoa, wait. So how did your limit orders get triggered like that? That's interesting. Like it moved the wrong way and your limit orders got filled? What? Because I gotta tell you, somebody here in the micro 10-year had a limit order out here to buy, and they regretting it now, right? The person that I traded against this should not have had that order out. Maybe it was a robot, but the person that I traded against shouldn't have had that order sitting on there. I'm gonna want to go back and watch that because there was a bit of volume around that spot after I took it too. Like I think I was really lucky to get the spot that I did. But good for you. You got 3-1. I got to tell you, you guys continue to impress me. I'm getting more and more of you guys coming in chat and showing me successes stories. Of course, we don't have 5 years worth of results, but what I hear from you guys does kind of give me confidence that what we're doing does help. You know that it's at least is better than what retail traders have been doing in the past. So I appreciate it when you guys share me that stuff. But if you get 5 years of returns, definitely come tell me. I told somebody on Reddit, like get 5 years of returns, and when you do it, don't come back and tell us start a fund, unless you're starting a fund. Well, you should. If you're one of my people, I definitely want to know. But just so you know, I'm going to pressure you to start a fund, and I'm going to try and invest in your fund, even if it's just $1,000. If you meet that qualification, 5 years, yeah, I want to invest in your fund. Start a hedge fund. I'll put $1,000 in. If you have 5 years results, I trade mean reversion in price action. The price action is the dirty word. I use ATR, average daily range, to decide where to place my limit order. Okay. Well, it's not like there's not anything to that, right? Like again, this comes down to the more advanced statistics, right? With the way that the market behaves, most of the time that's probably going to work out. But when it doesn't work out, it's going to be really, really ugly. And I'm not just talking about like one individual trade. You're going to come into a time period where that strategy like fails 15 times in a row, just because like that month was a really trending month or whatever the deal was, right? So you could be really careful with those. And in that kind of situation, your risk reward matters a lot. So that you made 3-1 is very what is the word? Very encouraging, right? Yeah, well, volume profile can help. I'd be really careful about quote unquote support and resistance, right? When support and resistance really exists, it's usually because of a correlation, right? Usually. At least I think that's the case. I wish we had a study that proved that. I don't know how you would prove that, but based on what we know about how large meta orders dominate the market in inelastic theory of markets, I think that that's kind of like the next step. Wait, say that again. When there's real support and resistance on a chart, it's usually because of a correlation. Because um they the way this works is people come in and they execute a large meta order on a time basis, generally speaking. The large players, they just have to buy it, and the price that they get doesn't really necessarily matter, right? So they don't sit and say, I'm not going to buy it until it breaks this resistance zone or something like that. No, it's like they're buying it, and if somebody else is selling it strongly against them, like, great. And if it breaks down and there's a tons of stop orders that come in and fill them, great. But it's not a reliable market behavior that anybody has been able to prove. But there is, like, we know that the market will switch between mean reversion and trending, right? So if you're coming in and you're using ATRs and so forth to kind of get an average about where the market tends to turn around, and you trade that with mean reversion, you should be able to get a decent amount of winners. But you will go through periods where that doesn't work very well. At least that's always been what's shown up. I wonder, I should try and code something up for this, right? I should try and code something up that's like, okay, based on the ATR of the day, if we push below that, reverse it. Something like that, right? And then I should be able to show it. I should be able to show you on a chart, look, here during this market regime, it worked really, really well. And then during this market regime, it didn't work well at all. Because that's what you're going to see. This is going to be like 3 to 6 months where it's awesome, and then 1 month where it's just like absolutely dismal, terrible. My friend is a fundamental equities trader professional for a firm. He did good at university maths, and they just enter when the news is right. They have risk managers, analysts. Yeah, I tried to mean revert in one direction. Yeah. The thing is that the way that they behave is like, yeah, you can see it on the chart after they've done it. It's like, sometimes I flip flop, but most of the time I try to go with the momentum. So what does that mean exactly? So maybe try and draw it out to me like this. If you were trading the treasury today, what would you have done? Because I mean, I have a chart of the Great British Pound, but like I don't really know a whole lot about that instrument. If you were doing it in the treasury, what would you have done? It made a pretty similar move. It made a pretty similar move. So like, what prices do you think you would have tried to catch? Hmm. Not a new high there yet. They haven't touched 16, but the treasuries sure seem to be hinting that they're going to come and do that. And I'm actually kind of detecting a hint of flattening back out again. Like the 30 year seems to be trying to lead this charge. The 10-year note. In ZN, what prices would you have taken? In what direction? Because you're saying I try to go with the momentum, so then I assume that means that you would try to buy. Yeah. But it's mean reverting, so I'm not quite sure how you're sorting that out. Oh, the Thomas Sowell account. What do automobiles, guns, and homeschooling all have in common that makes liberals hate them? All these things reduce individual dependence on the government and on the grandiose schemes of other people's lives created by liberals and imposed by governments. Oh, you gotta love Thomas Sowell there. Very insightful. That's not actually him; it's somebody else quoting him that just regularly posts quotes. But I still enjoy the account. Russia's cash flow soared during the first quarter despite economic sanctions imposed by the West. The nation benefited from soaring energy prices brought on by its attack on Ukraine. They linked to an Axios story. You know, the whole thing about the Russian ruble, like getting crushed and then reverting back to where it is a very interesting story. I think that you could, again, like markets are not efficient. They can do lots of things to kind of try and manipulate that, but still makes it a really interesting story, doesn't it? Okay, I would be looking to buy this pullback anywhere based on the high created, which means I'll be buying any drop 90 points and above, which lines up with my pivot point S3. Let's see. So, but what I would say about that is that kind of sounds like a heuristic that is going to work most of the time, but that we might have some information that might help you be more accurate, right? Because what you're going to see is move, liquidity hole, right? This thing right here happens because market makers aren't willing to put up much liquidity in that location. So there's more buyers up here, there's more sellers down here, right? And in the middle is where like they all traded, okay? So if you're watching the DOM, you'll be able to see it happen. You could see it when the move initially happened, that you could see that it was probably 10 was gonna have something to do with it. We identified that very early on, right? Now, the pressure was still very much long, so eventually it moved up. But there was a liquidity hole here, and we kind of knew, like, they're going to range around here for a long time, maybe 45 minutes, maybe even longer than that. And then when the liquidity hole is healed, maybe they'll take another move up, right? So what you're doing is if you say this is the high, and this is how big the move was, where that hole is going to be, you might be able to game it out, right? That it's going to be like a certain percentage of the move, right? But you're going to be more precise if you just see the liquidity hole happening on the DOM. Yeah. Because I mean that is kind of what I do to some extent, right? Is I see a large meta order. I mean, I'm a little bit more I require a little bit more than that, right? I say, okay, here's a move, here's the liquidity hole. I think that there's more orders out there that want to trade on this and that there's going to be another leg. So I want to catch the bottom end of that range. So I do this similar sort of a thing. I mean, that's a kind of a setup that I like to see. It's just that I always need to have some piece of information to suggest that it's going to play out that way. Okay, New York Police Department news 24 minutes ago. In regards to the multiple people shot at the 36th Street subway station in Brooklyn, there are no active explosive devices at this time. Any witnesses are asked to call New York Police Department tips at 800-577 tips. Please stay clear of the area. More provided information when available. The DOM is so interesting. If I wasn't sneaking my trading at work, I'd be staring at. Same here, man. I even if I don't really know what's going on and I can't tell you what's going to happen, the way it plays out is always so interesting. How do you feel about volume profile? Well, I think that they are picking people that do volume profile are picking up on a real behavior in markets, right? Because if the market was random, then you wouldn't see a bell shape in the profile, right? It would just be disorganized every day. But it's not. You tend to see distributions around certain prices, right? The problem is that most volume profile people are wrong about why that happens. Most volume profile people think that it signifies some sort of an agreement amongst traders, and that's not the case. At least I have not seen the empirical evidence supporting that assumption. I think that the order flow driven model of markets and the inelastic theory of markets are a better explanation for why this happens. And what that means is that what really causes these distributions are liquidity holes. That people want to trade it in that location. Them trading it doesn't mean that they agree on value. It's actually quite the opposite. But that distribution kind of happens by chance and is not something that the participants actually want. It's like, you don't want to buy it and then it go nowhere, do you? No, that's not what you like. Except for if you're buying a ton of it and you know that it's going to continue. Just saying, right? But that's what causes the liquidity holes. So being able to see where those happened historically, could be useful information. I just think that a lot of volume profile analysis kind of veers into really technical analysis that is not really proven, or is at the very least isn't going to help your trading. Like the point of control from yesterday, we're more likely to touch that. I mean, if you run and do stats, you're probably going to find it to be the case that the previous day's point of control gets touched. But that's just because volatility clusters. So what the volatility was yesterday is likely to be somewhat on target for what the volatility is going to be today. And if it doesn't, sometimes it really clears that. And so it doesn't really make a very good risk reward trade. You know what I mean? Or, if they think that this high volume area, here would be a great example. A volume profile person would say, okay, we've built a bell in the profile. That means that we've found a value area, right? So now we have to wait and see if somebody is going to make a range extension higher or lower, and we don't necessarily know which way they're going to do it. No, that's not the case. In this instance, there was a large meta order buy order, and there is a good chance that there is still a large amount of meta order buy out there still to execute. And there probably will be some more to execute later after the auction as well, right? So does this mean that they agree on the price? No, it's just where it's settled because of the liquidity hole, right? So that's an instance where the volume profile people, I think, would interpret it wrong. I feel like the high volume is always in the center of a range, and that's why they say it's price agreement. But I would argue it's more likely because price trades through that. Well, yeah, that's exactly it, right? Is market makers don't really want to offer liquidity in that location, and that prevents it from moving. You would think that, well, if liquidity providers don't want to provide much liquidity in that location, then you would see lower volume in that location. But what ends up happening is it stays there for so long that in the long run, way more volume ends up trading there than anywhere else anyways. It's so curious, right? It's kind of, but isn't it interesting? This is the way that science goes all the time, is we'll think it's one thing, and then we'll come along and we'll discover something else that really shakes up our understanding of it and shows us that phenomenon is actually way more complicated than we ever thought. I think that's really the case here, because is it the case that the market profile people were dead wrong? No, it's just our understanding based on market microstructure and the inelastic theory of markets is better. It's it's a more accurate understanding of how the market works, right? I do think that there are some professional traders that look at like volume profile kind of stuff, but I remember the traders at Goldman talking about, oh, you should look into volume profile, but I don't know anything about it. This one guy over here, he's really into it, and I've seen him do some amazing things with it. So I think wanting to understand the market is an ego thing, but market makers' trading strategies suck. Well, maybe it is an ego thing. No retail trader wants to trade like a market makers. They take unreasonable risk. Well, so first of all, I think that market makers take on more risk than retail traders realize, right? It's just that the amount of risk that they are taking compared to the amount of risk that they could take, it's a very small amount of it. But the amount of the degree that they're willing to let it go against them and stuff is quite obscene. So to some extent, a lot of these market making strategies may be ones that are using like a low R factor and stuff. Totally possible. I mean, it's going to depend, but yeah, you could do that because like here's the thing. The whole thing about you can make money just from taking on risk. So just because you've made profits, if it's the profits are really derived from excessive risk, then that's unlikely to continue to work, right? But if you actually have a real true edge, if you have a real true edge that you can prove, right? Then you add the risk on top of it. That's where the real money is made, right? The risk is really bad if you don't have an edge. In the long run, it just kind of hides your inadequacies. But if you know you have an edge, then you want to add the risk on and you want to push it. You know what I mean? But I think for me, it's like maybe it's partly an ego, like, but I think that this stuff has really helped. Like, I can't prove that. I wish that the research was as such that it proved if you do X strategy as a retail trader, you're likely to make money. There's no research out there like that I've ever found, right? But it often kind of will give me hints. It'll often, I'll be able to say, well, based on what I know, and it suggests that this might be a better place to try and get in, or not. Maybe this isn't the right time to get in. And I also think that it very, very much helps you like avoid bad strategies. Like there's so many things that retail traders think that like once you know the real empirical behaviors of markets, you go, oh, that's like totally wrong. No wonder they're losing money from doing that. I think the best example of that is support and resistance. So the whole theory that like there's people want to buy it down here and people want to sell it down here, and you can see it in the chart, and when it comes back down there another time they're going to buy it again. It's total nonsense. There's no statistical backing to any of that. And if you think that you see a support and resistance, it's probably because of a correlation, which means that there's probably a better way to determine when to buy and sell it, and that is know the correlation, right? But what we know about inelastic theory of markets says that price is not inelastic, that as price moves up, that doesn't mean more people willing to sell it. That's not how it works at all. It's the new orders have a really big impact on the markets. And it will continue to go up until the meta order is finished. It's so I anytime that I hear support and resistance, I'm immediately going, okay, well, I could probably prove. I know based on what we know already that that's not going to work. How could I backtest and show that it's, will give them the best chance of proving to them that that's not a strategy they really want to use. People also do not believe in tape reading because they cannot figure it out. Well, I don't know, TLA. I have not really seen an instance of really well proven, consistent tape reading expertise since like the spoofing era. So I think that the reality there is that probably a lot of what people were doing with tape reading has just been arbitraged away by robots. Tape reading is what Wyckoff is about, even though I haven't read his book. That whole Wyckoff pattern is total bullcrap. like like I think it's a great example of showing like how a stock operator might approach a trade and work. But the whole idea that like there's this pattern and like you should take it here and it's again, you're running into all of the fallacies of technical analysis, right? That's another way to approach it. It's like one side that I could take it from is here's what we know about markets, and this doesn't line up with what's been proven. Okay. So you would really have to have a whole lot of evidence to suggest that what's proven that's wrong, right? But the other approach of it is here are all of the fallacies that technical analysis makes, and if your strategy is based on anything of that sort, it's unlikely to work. Sometimes it do be like that. Well, they haven't busted the highs yet, but the treasuries are still holding pretty good up here near the highs. We've got about 30 minutes left in the stream. Where can I find trading strategy? Well, so go and watch my videos because I got a good summary of what is known. Okay, a lot of what I got is summarized, or well, I'm not even. I mean, they go into depth about it, but it's really a summary of like the empirical research that's out there. It's called Trades, Quotes, and Prices: Financial Markets Under the Markets by Jean-Philippe Bouchot et al. There's two other guys that helped him that are also like really knowledgeable people, but I point out Jean-Philippe because he's the most prominent person out there that you're going to be able to find anything about online. If you want to follow somebody, I really like that guy. But and that goes into like the things that researchers have been able to prove about market microstructure, essentially, right? And it kind of explains how they got to the point that they did, where it was like, well, okay, there is an autocorrelation in whether orders are buys or sells. Why is that? They tried all of these different models. They didn't work. So then they said, well, what if it's just because there's like one big guy out there buying and executing it over a long period of time? And so then they did that model and it worked. So then they started to go in and they said, okay, let's like actually get data from large brokers and see them execute an order and see how it affects the market. And then all of a sudden they found, oh, well, it's the square root law. What's with that? And then they started doing all this other research, and then they found the liquidity holes, and they said, oh, liquidity hole kind of has some of the same terms in it as the square root law does. So maybe that's a reason why the square root law happens. And that's how I'm able to come in here and say, well, what's likely to happen is you're going to have a move, liquidity hole. They're going to wait until that they've used up that liquidity hole, and then they're going to make another push and create another one. That's how we know that from that research. Not going to lie, I always have fun in your... Oh, good. I'm glad. Sometimes I wonder, like, I have a tendency to piss some people off. Like, especially on Reddit and like message boards, there's always seems to be this one type of person that just always will get into an argument with me. And it always seems, from my perspective, they always seem crazy. But I really think that they're just reacting to like how confident I am. Like, I'm coming in and saying, well, basically everything that you've based your trading on is a lie, and I can prove it. Nobody likes to hear that, right? So they found the secret sauce, so now we want to tell others about it? Well, I wish it was the secret. I wish it was a silver bullet. I really do. I wish it was a silver bullet. But like the kind of the thing is that what this research. So I told you, like, that's how I kind of use that research, and like this is how the market is going to behave and everything else like that. But you notice when I am analyzing it for you guys, like there's a lot of nuance around it, right? What the secret sauce really tells us is that trying to predict markets is really hard. Is really hard, and you probably have to know something that other people don't in order to do it effectively. And most of the time, we as retail traders don't have that, but we can try. And it's fun to try, right? So, you know what I mean? Like a lot of that research, kind of like the professional approach to this, right? Because if you were talking to like the block order traders from Goldman Sachs about this, they would be able to tell you all of these formulas, probably even derive them for you, right? But they would also tell you you just shouldn't trade as a retail trader. Like everything that I know says that retail trading is not going to be worth it. And you know, like they're probably right. It doesn't mean that it can't be done. Doesn't mean that you shouldn't try. Is just kind of means that like what we're trying to do is really difficult, right? And there's a lot of chance to it. So, you know, that's kind of the sucky thing about it. That's why people don't want to hear it, right? That's why people don't want to hear it, because what they want to hear is, here's this one pattern, and if you just follow this one pattern and take this trade in this one place, and you're really consistent and you stick to your guns and you have all of the right psychology and you believe that you will win, then you're going to do it. I promise you guys, you just have to believe in yourself, go into the morning every day, give all of the positive affirmations, and you will be successful in the futures trading market. It doesn't work like that. All of the research that we have says it doesn't work that way. You have to have an actual edge. If you don't have an actual edge, you're likely to lose money. And how do you have an actual edge? You have to have something that predicts future orders. Just sit and try this with us, right? We came in here, we had a move, okay? We had a move on CPI, and we said, well, this is how far the cumulative delta could be, right? And try to predict what the net change in cumulative delta will be by the end of the day. And just try and predict that, right? And think about that. And guess what? Like 90% of the time, you're not going to get it exactly, right? And all that I'm proving with that is, guess what? Future orders are really hard to predict. They're really hard to predict. What we're trying to do is hard. Jim Simmons Medallion Fund has a win rate of 51%. Where did you get that information from? I would like to know more about that. I'm really interested in what Jim Simmons does in particular. That firm in particular, it seems to me that what Renaissance was doing would be more applicable to what we're trying to do in futures trading than probably anyone else. But it also kind of sounds to me like that they're using that part of their big breakthrough had to do with machine learning and all of this other stuff. That's another thing, is that like there's this other facet of this that I'm still learning. Okay, so I don't talk about this as much because I'm not going to say that this is necessarily proven. But from what I've seen so far, it kind of suggests that edges that may be available to you in the market are going to be ones that are really beyond human understanding. That it really requires sophisticated machine learning models to discover these inefficiencies, like these technical inefficiencies in the market. And you might be able to come in and say, okay, well, here's a fundamental. It's something that we think is going to happen or is happening right now. How is the market likely to behave as a result of that move? And then you'd still need to have all of the data tools and the machine learning and everything to be able to sort out all of the different factors that were involved in that market at the time to try and make a worthwhile prediction about what it's going to do today, right? Oh, it wasn't an interview by him? Okay. I've watched a lot of interviews by him, but I just don't ever remember him saying anything about what the win rate was. I totally believe it though. Well, here's why I believe it. If you have too high of a win rate, what you're often doing is increasing the kurtosis of your strategy and creating a fragile strategy that will seem like it works really, really well, and then the next major financial crisis happens, you get blown out. Man, that trade, by the way, here on the ES, at one point it was like $500 in the money. It came all the way back again. I would like to hold it until 4,500, but I might have to swing it to do that. But I think you might be right. If you really have a good informational edge, I think that you would still be winning like 51% of the time. But your winners are probably a lot bigger than your losers. Right? That's where the profits come from. Because if you have something that's like a 50% win rate and it has a decent amount of variability in the returns, that's going to be less fragile, essentially. Yeah, people who understand the market have a score of 66% and 1.5 risk reward. Where did you pull that from? Cite your sources, folks. Come on. I mean, I've heard many times there was a thread on Reddit, and people were posting it. It's like, it's probably better to have a 50% win rate, but like, I don't know how to like prove that empirically or any kind of like study that suggests that the case. I have, there's a few things that we know about statistics and the fragility of your strategy that kind of maybe suggests that might be true, but Twitter's getting pretty active here today, but I still don't know. What is this? Yeah, okay. Don't know about that, what that was about. I'm still waiting for more information from this thing in New York, but we're not getting much. But anyways, yeah, if you're trading 50%, do you use Fib? No, absolutely not. Fibonacci extension retracements, etc., is one that I've never really back tested thoroughly. Because like to me, so first of all, anything that is like technical analysis, which is basically using past market price to predict future market price, like I'm immediately going to say that doesn't work, right? So when I'm approaching something like that, I'm always kind of looking at it from like, okay, I want to back test this, and I want to do it in a way that anybody that's using this will agree like that's the way to do it, right? And the problem that I run into with Fibonacci numbers in particular is that like there's no one single way of determining what the Fibonacci numbers are, right? Like one person will say you go from the initial move to the high of the move, and then you should see a retracement of X%, and that's where you should buy it, right? Some people will do it based on daily numbers. They do fibs based on the day, But then if it's a fibs based on the day, it's like, well, it's not going to bounce off it exactly. So how much risk reward do you get? Like there's so many little questions like that it's like I can go and backtest it and I can try and make something that works. But what I'm going to come up with is probably not anywhere even remotely close to how people use it. So it doesn't end up being very beneficial to the people that trade Fibonacci numbers because they just dismiss it. You know what I mean? For a market to go up, let's say aggressive orders need to blow out passive orders. Sure. So in a way, what should we do is predict passive orders if it's weak or strong, basically whether it will hold or break. Well, yeah. Well, you're not wrong. Generally speaking, the aggressive orders are going to be more indicative of where a market is going, especially when there's information in the market. Informed traders tend to prefer to use market orders. Sometimes market will just kind of float out without anything unusual happening from the market orders, simply because of a correlation, right? So the reality is, that's why I always say, like, we need to predict future orders. Predicting future orders kind of means, yeah, we need to be able to predict the market orders and the limit orders and how many are buy and how many are sell. And that's kind of where the more complicated stuff comes into play, right? Is when you're sorting out that puzzle, then you can kind of get some idea about some prices or time periods that might be more effective to trade, right? You know, if I know that the liquidity is going to be really weak, then I need to expect more volatility, et cetera, et cetera. So, but yeah, and you know, that's a complicated whole system, because you know, the limit orders can be weak and the market orders can be weak, and you know, there's basically like 6 different forces, right? There's the market orders, there's limit orders being placed, and there's limit orders being canceled. And then there's those 3 forces for buys and sells. So it's like 6 different things. And if you kind of think about all of the different combinations of like this one being strong and this one being weak, and there's 6 of them, like that's a complicated matrix of things, right? It's a 6-dimensional matrix. So kind of difficult to categorize the different types of markets that you could see, right? That comes back to, a lot of this stuff is more complicated than we as humans are really capable of understanding. We need the assistance of machine learning and computers to help us. But I'm still working on that. That's what I want to do, is I want to place those 6 things into the matrix, and also how trendy the market is. And also I'm hoping some alternative data, some way of kind of suggesting what biases it might have that day, and put all of that into a machine learning system. Six of it. Well, it's not. I don't think it's quite that. It's like, you could say that it's high, low, or neutral. So 6 times 3. So like 18 different possibilities. The only thing that was transitory was use of the word transitory, says Truth Gunlock, who hasn't spoken in front of an audience in 2.5 years, slams the Fed right off the bat. You know what? I think he's right. Listen, everybody always has an axe to grind with the Federal Reserve, but Gunlock, I think, really picks up on like the correct things, right? He doesn't just hate the Federal Reserve just for the sake of hating the Federal Reserve. He knows where they've been wrong on things, and he's been able to navigate it really well. There's a reason why he's the bond king. I tell you what, that's a guy I would love to meet. I think about that all the time. It's like not a bash to like other YouTube creators. I'm sure maybe someday we'll get collaborate more with other YouTube creators, but like the people that I'm really interested in are like people that are running funds and are putting out professional research and are doing research at universities, and those kinds of people. People that don't interact with our world very much. And I'm kind of hoping, I'm trying, I'm not quite sure where to take it, but I'm hoping that maybe we as retail traders can get better access to those kinds of people. I'm hoping that I can get those people I think that most of them, they just say, well, yeah, retail trading doesn't really work. But guys, somebody has to do it. You can't just let the robots do everything. Is it really good for the markets for one robot maker to be in control of like almost all of the liquidity? I don't think it is. And so I'm hoping that we can convince some of these people that, yeah, we know that what we're trying to do is hard, but it's still worth trying, and we can use all the help that we can get. And I'm hoping that maybe we can convince some of these people to help us at some point in the future. So any kind of discussion that we can get with fund managers or the people at the banks doing institutional research, or the people at the universities doing scholarly research, those are the people we want to talk to. By the way, there's only one person that I know of that like they managed a fund and they're talking to retail people, and that's Patrick Doyle, and that's a good channel to watch too, by the way. And what are the sorts of things that he talks about? It's like informational content about current market happenings. Hmm. Hmm. Well, do you think that so this S&P 500 has kind of been on the downtrend for the last hour or so? It's kind of just been a slow but big downtrend, just retracing again this same range that they've been trading. I don't know if the market is like, well, okay, like that's good, but we're still bearish. I don't know, because again, I still kind of feel like that the gamma is likely to dry you up to 4,500, but so far that's not what really has been happening. But I don't know, like you're getting like really big back and forth and cumulative deltas. So like there must be two sides to this trade and so forth. The Treasury, we've been hanging out at the top of the range. They've made a couple of pushes, but they've never really been able to hold meaningfully at 15. It may happen. You may get after the European close, and we still have an auction, right? And we have reasons to believe that the auction may be bullish. So we may not have seen the high of the day, but for now, it looks pretty quiet. Looks like they're just kind of settling at the top end of that range. So that's where we're at. Got about 4 minutes here, and then I got to get going. And I don't know what I'll do with this trade. I mean, I would like to hold it through the auction, but I don't really want to have that in the back of my mind. I want to get some work done today. Yeah, there is some volume trading in the Treasury still. There's a decent amount of volume going back and forth there at 14, for instance. I actually, remember I was saying there was a point at which it seemed like maybe some steepening was coming in, or sorry, some flattening was coming in, but like that subsided. And like the 30-year is down a little bit, and the 5-year is still up, and the curve is still steepening. So that's probably really good for my banks, though. And then the 14 goes offer. I don't know. Let's see here. Intermediate work. Hybrid work is plausibly the sweet spot where workers enjoy flexibility and yet are not as isolated compared to peers who are predominantly working from home. The paper said intermediate hybrid might offer the best of both worlds. The study, a rarity in that it examines actual hybrid worker outcomes rather than just their preferences, comes as companies like Apple, Bank of America, and Google are nudging workers back into the office. Yeah, I tell you what, one of the funnier things that I see happen is there's kind of been this like social media war against Goldman Sachs for requiring the employees to come back to the office. And they're like, well, don't expect anybody to work for you then. And I'm sitting here like, how can you be in investment banking and expect to work from home? Like, you guys must have no clue what they do, because like their whole business, man, the amount of effort that those people put into where you sat is just astounding. It was like every 6 months they would rearrange the whole floor because like who sat next to who and which group was closer to each other mattered a lot to them. Proximity matters, and they have a lot of data to guide them in why they do that and why anybody would think that the banks would ever be okay with people working remote in that situation is just like, okay, you're crazy, but okay. Whoa, what is Ray Dalio going on about here? Understanding what is true is essential for success, and being radically transparent about everything, including mistakes and weaknesses, helps create the understanding that leads to improvements. Yes, I agree. That's not just a theory. We've put this into practice at Bridgewater for over 40 years, so we know how it works. But like most things in life, being radically truthful and transparent has cons as well as pros, which I will describe as accurately as possible. Okay, very good here. I might have some similar experiences. Being radically truthful and transparent with your colleagues and expecting your colleagues to be the same with you ensures that important issues are apparent instead of hidden. It also enforces good behavior and good thinking because when you have to explain yourself, everyone can openly assess the merits of your logic. If you're handling things well, radical transparency will make that clear. And if you're handling things badly, radical transparency will make that clear as well. So it helps to maintain high standards. Radical truth and transparency are fundamental to having real idea meritocracy. The more people can see what is happening, the good, the bad, and the ugly, the more effective they are at deciding the appropriate ways of handling things. I think that's true. I think that because of doing the stream, that I'm a better trader because of it, right? Because you guys have you can see everything that I'm doing and I tell you everything that I'm thinking. The approach is also invaluable for training. Learning is compounding and accelerated when everyone has the opportunity to hear what everyone else is thinking. There you go. See, because you know what I'm thinking, and you guys, I think that you would do a lot of the same. We've been able to learn a lot. Like no joke, right? We have gotten into knowledge about markets that nobody else in the retail sphere talks about. Period. And we're only able to do that through radical transparency. As a leader, you will get the feedback essential for your learning and for the continual improvement of organizations' decision-making rules, and seeing firsthand what's happening and why builds trust and allows people to make the independent assessments of the evidence that a functioning idea meritocracy requires. Well, that was a lovely series of tweets, but you didn't really say what you said you were going to say in the first tweet. I thought you were going to say, yeah, but sometimes when people are really transparent, it pisses people off. That's been my experience. Tell Dalio I want to work from home. You think Dalio is all about helping the small guys? Maybe the case. I don't know. Here's the thing. I think that there are very, very few people in the professional world that are going to say, oh yeah, you should totally scalp. Like, that's a great idea. No, they're all going to tell you probably not going to work out for you. Because everything that they know says it's hard, if not impossible, for you as a retail trader to be successful at that. It looks like Democrats' plan is to go into the midterm elections with the message that Vladimir Putin is responsible for the inflation and gas prices rising. When they get destroyed, they will blame Putin again, either hacking or spreading disinformation. Very predictable. I hope not, but you might be right about that one. He's for the small guy like that Indian dude was for the small guy. Are you talking about Navinder? I think Navinder was primarily for himself, but maybe now that he's not allowed to trade, he can help us out. Hey, Navinder, if you're listening, we talk about you from every once in a while. So maybe, it's kind of weird for me to think about. It's like some of these people well, by the way, we touched 16, by the way. I think there's a possibility some of these people watch and hear me. And I'm just telling, if you're in the industry, help us out. We could do interviews and stuff. Would love to do that. Give retail traders better insights. Jordan Peterson is tweeting on inflation. What's he say? Expect way more of this, particularly in relation to food. Okay, so now you are a market analyst, Jordan? Okay. I mean, I love the guy, but I don't know if I would look to him for market predictions. I am a little bit concerned about food inflation, though. Hey, 16, that's good. We're getting a good trend here now. The 30-year still has a little bit to catch up. And there's that big old fatty order at 18. Do you think, but anybody with MBO data out there, are there any large orders above 18? S&P 500 is still kind of chopping around in this area too, by the way. That's curious. Hey, it's time for me to go. I got carried away. The Indian dude with the specs, I don't know. Failed after he got them died. Yeah, I don't know who you're talking about. Hey, tomorrow is a good day. We'll see how this turns out. In the meantime, stay profitable.